assets. See problem number 8. Problem number 8. What they given? Problem number 8. There are two firms, X and Y. See, two firms, not two plants, two firms, two companies. If not a levered, Y firm Y is levered. X is not levered, means they don't have more liquid cash, leverage cash, but Y company having. The following information is available. Particulars X company, Y, X firm, Y firm is given. Assets is given, 5 lakh given. Debenture capital X, no, they are raised 0 given. Y given 2,50,000 they raise fund by paying 9% interest they given. Equity share capital 5 lakh, 2,50,000, number of equity, number of shares they only given 50,000, 25,000. Rate of return on assets. Rate of return on assets. Return means what? Income, EBIT. They given what percent? 50% they given. On assets they given. Tax 50% given. Will be advantage to firm Y to raise the level of debt to 75%. If a company raise the debentures 75% on assets, it is worth to Y company, Y firm, they are asking question. Here, in this case, I told you now, first you have to do second point. Calculation of EPS. Calculation of EPS on number of equity shares. Number of equity shares is given, no problem. Directly we have to calculate calculation of EPS. Calculation of earning per share. EPS is, we have to calculate directly. Particulars firm X, firm Y. Firm X given, not plan here. X firm given, Y firm given. First you have to take return or EBIT, earning before interest, or you can take return. At what percent? They given return, what percent they given? Return on assets 20%, 20% given. Both from 20% of assets or on assets. Assets, how much we have? Both company 5 lakh. 5 lakh into 20 divided by 100. 1 lakh. Another company assets 5 lakh into 20 divided by 100. So 1 lakh. So 1 lakh EBIT. Y company also, firm also 1 lakh. Less I have to deduct calculate interest. Interest on debentures. So you see question debt. Question assets 5 lakh, 5 lakh. After that point you have to see debt 0. No need to, they will not raise funds by paying interest through debentures. 0. Second given 2,50,000. 2,50,000 into 9% interest and given. So this into this divided 100, you get 22,500. Interest you have to deduct. So 1 lakh. So 77,500. 77,500. This is called EBT, earning before tax, less tax. Less tax at 50% here also. So 50,000 half of this. So 70 this 38,500. 38,250, not 500, 250. Half of this. 30,000. 750, not 250. 38,000, half of this. 750. 77,500 into 50 to 100. So you will get same 50,000. 38,750. This is called EAT. Less preference dividend, preference share capital, preference dividend. You see both firms. Equity share capital 5 lakh, 2 lakh 50. Number of shares given, rate of return given, nothing, not given. Preference share. So 50,000. 38,750. This is called earnings available to equity share holders. Right, full sentence, earning available to equity shareholders. Now EPS equals earning available to equity shareholders divided by number of equity shares. 50,000, okay, here 38,750 divide number of equity shares, they only given 50,000 and 25,000. 50,000 and 25,000. So here equals 1 rupee. This divide this 1.55. 1.55. Okay. So this is called EPS if two funds is given, if assets is given in the question. Last firm equity capital 50 lakh given and calculate. Here assets of rupees 5 lakh both firm given. How to calculate EBIT? See, after understanding this first calculation, see second calculation what they ask last is adjustment. What they ask in the question regarding Y form they given. Y form. What they given Y form? Only Y form. I think is only Y form they given. What they let's see. So particulars form Y. See they given Y form. Why to raise the level of debt capital to 75% when debt capital debt means what debentures raised at 75%. 75% on what? On assets. 75% on what? On assets. They are not given, but assume 75 asset. Now, how to calculate EPS? Calculation of EPS, earning per share. Again, take it. Here, before calculation EPS, we want number of equity shares. See here, analysis table. Only Y for particulars from Y. So here details they given, assets they given. Y for how much assets given? 5 lakh. Detail. Here they given 9% debentures, 75% debentures, 9%. Interest rate is say 9%. 75%. I see given 75% there. 5 lakh into 75 divided by 100. So 3,75,000 is given. Debt finance got now 75%. Later calculate 9% interest. 3,75,000 into 9 divided 100. 10. Equity share capital. Equity share capital. Equity share capital here 75% debt finance means out of 100%. Remaining 25% is equity capital. Remember 5 lakh into 25 divided by 100. 75% means remaining is out of 100 deduct 70 remains 25%. So 1 lakh 25,000. These are details. The number of equity shares. Number of equity shares. Number of equity shares means what? 1,25,000 divided by 10 each. 0 will get cancelled. 12,500 is number of equity shares. We want this. Now, how to calculate EPS, calculation of earning per share. EBIT, same 20% of asset 1 lakh. Less interest on debt means debentures. Here only 3,75,000 into 9 divided by 100. So we'll deduct. So 66 to 50. 66 to 50. This is called ABT less tax at 50%. Half of this 33 125. 33 125. Deduct again 33 125. This is called EAT, earning after tax less preference dividend. Dividend. Not given. Preference not given. Preference capital nothing is given. This is 33 125. This is called earnings available. Earnings available to equity shareholders. Now EPS equals earning available to equity shareholders divided by number of equity shares. 33 125 profitable equals divided by 12,500 shares. So you will get 2.65. 2.65. So you write conclusion. What conclusion? It is advantage to the Y firm to raise financing 75% of debt finance because it increases the EPS from 1.55% old to 2.65%. Means it is advantage to the Y firm to raise the funds by issue of 75% debt finance. Okay.